Welcome to Get Real with Eddie, the show that dives into local, regional, and national real estate, the largest creator of millionaires, and the key to building generational wealth. Hosted by Eddie Ruettiger, designated managing broker of Exit Real Estate Specialists. Eddie is here to share expert insights and strategies to help you unlock the power of real estate. Now, let's grow in real estate with Eddie Ruettiger.
Good morning, Nancy. How are you?
Good morning, Edward. I'm well.
I need to adjust my headphones here. There we go. They were too low. And if they're too low, I have to talk louder. And that's the last thing.
We don't want you to talk louder. No. Okay. Your voice carries in a whisper anyway.
And it does. It does. And I peg the board as it is. There is, like, I'm not kidding, on the pods, on the board, there is about a 10 to 20 dB difference between where I put my mic and where I have to put your mic.
I believe that.
Yeah.
And because you are one of the only people I know that I don't have to wear my hearing aids with, and I can hear you perfect.
I articulate very, very well.
And you're very, very loud.
I am. You know what? My grandpa didn't hear well, and he talked very loud. He just talked loud. Wasn't yelling.
Right.
And his voice carried, it's something I picked up, I think, from him.
Yeah.
And it's just a habit, and it's just nature to me.
Well, and I was going to say, in just the range of your voice, the timbre of your voice just naturally carries.
Yes, it does.
So you're just all out there.
Yeah, I am all out there. So did a little digging.
Yeah.
Because I think there's something about to happen that no one is going to pay attention to, and this might be something coming forward.
Okay.
Everybody is so focused on the federal funds rate and the interest rate that I don't think they're about to pay attention to what's about to happen. I think the rates are going to come down, and you're not going to see the Fed fund rate really move.
The FUD?
The FUD.
The FUD.
The Fed fund rate move. I think we're only going to see about maybe 2 adjustments. Maybe 1 in the next year.
Yeah,
there's people out there talking 3 or 4 adjustments, by the way. You know that, right?
Yeah, but I don't see it.
I don't see it either.
I don't see it. But a lot can happen, because look at what's happened just in our world.
Well, and
things move and change so quickly is my point with that.
And what's your favorite saying when it comes to these things?
As far as just a lot can, John and I have a saying, a lot can happen in a year.
Well, not just that. Yes, a lot can happen in a year, but it's more. You've said it on the show multiple times.
It's complicated.
It's complicated.
It's very complicated.
And we're going to get into some of the complicated. So I kind of asked one of the little AI models a question.
Okay.
And we got some answers back.
Dum, dum, dum.
So the question was, everyone is focused on the Fed's funds rate and mortgage rates and lowering of the Fed's fund rate, bringing down mortgage rates indirectly and in time. What are other ways the Fed or administration can act to bring down rates without moving the funding rate? And we got some answers.
Okay.
Quantitative easing. Now, we've all heard that term in the past. Mm-hmm. Buying treasuries and MBS, which are mortgage-backed securities. When the Fed buys them, demand increases and yields fall. Okay? So think of it this way. When it comes to mortgages, you need somebody putting the money in the pot for you can borrow that money.
Right.
Okay? If there is a lot of money in the pot, the rates come down for the end user because they got a lot of money in the pot.
Yeah, they want it attractive to you to use
the money. Yes.
Right. Mm-hmm.
But if there's not a lot of money in the pot, the rates go up because they need to attract more investors to get more money in the pot and make it worth the risk.
Right. Supply and demand.
Exactly. Okay? So they can buy mortgage-backed securities. This is going to be the bring down rates. All right? And this works no matter what the funds rate does. All right?
Yes.
And or slowing of QT, which is quantitative tightening. Right now, the Fed lets bonds roll off the balance sheets. That increases bond supply, and they keep longer-term yields high. If they slow QT, quantitative tightening, this could help ease mortgage pressures. So, forward guidance is another aspect that can bring down the rate. Now, they've already kind of done this. Hey, we're done hiking.
Yeah.
Rates are coming down this year. When they say these things, then banks are more likely to look at lowering their rates.
Yes. Relaxing things.
Because they know and they realize, hey, the rates are going to come down on the stairs, but they took the elevator to go up. Let's be honest.
Yeah.
So if the rates aren't going up anymore and they're coming down, then it gets the banks more comfortable to start lowering their rate on the guidance aspects. Operational twists, yield curve targeting. So sell short-term treasuries, buy long-term treasuries. Get that yield curve between the aspects lower. This lowers the long-term yields without touching short-term rates. Fed did it in 2011, 2012.
Mm-hmm.
All right?
Yep. Worked back then.
Yep. So regulatory changes can also affect what is going on. The adjustment of capital requirements, modified liquidity rules, ease constraints on the banking balance sheets, all of these can have an impact. If a bank holds mortgages or MBS cheaply, spreads can narrow.
Mm-hmm.
So these aspects can come into play also. On the government side, the administration through Fannie, Freddie, or FHFA can reduce guaranteed fees, which are G fees. These are the fees to create loans that they charge.
Yeah.
Expand conforming loan limits. So, like, I think FHA's limit is, I think, 400,000 in Illinois. It depends on what region you're in and stuff like that. You know, all right, so I'm way behind.
What you looking for?
In 2026, FHA loan limit for a single-family home ranges from a national floor of $541,287 in low-cost areas to a ceiling of $1.2 million in high-cost areas. So it depends on your area.
Yeah.
But I didn't think it was that 541.
I didn't think it was that high.
It's that high now.
Wow.
So
says a lot about the price
and it
of
might
the
be
house.
so it might be even higher for Illinois. It might be up to 600. I don't know. So because I don't think we're the bottom of it,
No.
but I think we're below the middle mark.
Yes,
'Cause
we're definitely not the highest.
No, we're not on the high end.
No.
So
We're in the Midwest. That's a plus.
And it also changes what the aspects are for those units. So, but the limits on the loan, credit availability, so how many loans they're willing to do, all of these can have factors on the lending. Fiscal policy at the Treasury also can have an aspect. If the Treasury reduces long-term bond insurance, lessens supply, lowers yields, lowers mortgage rates. These are things that are controlled by the administration, not by the Fed. So, inflation still comes into play with all this.
Yeah, of course.
So, bond investors demand, lower yields. If it could be an issue. Mortgage rates falling, without cutting. This all can happen without the Fed cutting rate. So, this is where I see this year going. I don't see it being about the Fed fund rate anymore. I think it's going to get back into, quantitative easing. It's going to get back into, these levers that they pull that are not as publicized, not as advertised as this Fed borrowing rate.
Yeah, they might dink with the pipes.
That's a good way of looking at it. Instead of having a 1-inch pipe, they're going to go to a pipe that's a 2 or 3 inch diameter.
Yeah, exactly.
I mean, and you're going to get more flow.
Yeah.
And that's going to get your rate.
I might put a Y in there or something,
And that's going to get your rates down.
Yeah.
So, but it still may keep your commercial rates higher.
Well, and commercial's a whole different egg.
I mean, don't get me wrong. All of these things have an impact on inflation, and that's the aspect. And that's the one thing with the Fed. The Fed has 2 missions, but those missions are in conflict sometimes. Mission 1 is keep inflation down. Mission 2 is keep employment high. Well, sometimes those things are in conflict.
That's why, yeah, and that's why the balance is so hard to
because it's like
achieve.
Yeah. It's like, I want you to be able to run this race, all right? But I want you to run across the finish line that's clockwise and counterclockwise at the same time. I mean, that's the easiest way to explain it.
Yeah.
Is because when you are combating inflation, there's a chance that people are going to lose their job, and now unemployment goes up. But if you're doing things to counteract unemployment and get more people working, you may have an increase in inflation.
Yeah.
So, but this is where I think everything is going towards. So, if you're in the market, start listening, start watching for these things. Because I think that is going to be the key. So we got an article from homes.com, and it's talking about the data shows 1 year into President Trump's term, the housing affordability has shifted. According to, so this is Danny Romero at homes.com. This came out on the 23rd of February. So the first aspect and main thing that they talk about this is that the mortgage rates have eased. All right, offering modest affordability relief. Rates are at its lowest levels since 2022.
Yeah.
That's huge.
Yeah, they're coming back down. Well, the market has changed so much since then too. I mean, really. We've been all over the place.
households have seen a bigger improvement in their financial situation, but mostly it's not because lower interest rates happened to them, said Brad Case, chief resident economist for Homes.com. Mostly it's because they paid down their existing debt and worked hard to increase their income. With lower rates also helping, that all puts them in a better shape to buy a home without getting stretched financially, Case added. I mean, that's true, man.
Yeah.
If your credit card interest rates,
yeah,
because some of these credit card interest rates are
killer,
horrible right now.
Killer, which really kills your affordability.
Yeah. Because you get stuck in a cycle where you're just paying, and you're not really getting ahead. You're falling behind, even though you're making all your payments on time.
Yeah.
Refinance window opens. So homeowners have also seen some momentum on refinancing. Even with recent declines, mortgage rates remain far above historic low seen during the early months of the pandemic, with 30-year fixed fell below 3% during Trump's first term. Borrowing costs on a 15-year mortgage, popular among home buyers who refinance, fell to 3.5.6, the lowest rate since October. So a 15-year mortgage that fell down to 3.56?
Yeah. Wow.
Since October 2024. That's huge.
That's huge.
So, and it gets into government action influence on the mortgage market. And we just kind of talked about what they can do. And so here, what they're going with. In January, Trump said that the government-backed mortgage finance companies Fannie Mae and Freddie Mac would buy $200 billion in mortgage bonds, part of the presidential's broad effort to lower housing costs. These two housing giants purchase mortgage from lenders. They're either hold these loans in portfolio or package them into mortgage-backed securities and sell the bundles. It's really hard to improve affordability in a big way, Case said. Having Fannie and Freddie buy mortgage-backed securities really could reduce mortgage interest rates, not by a very large amount, but only temporary. But that could help some households who have already been getting ready to buy a home. And that's the thing. Your favorite saying, it's complex.
It's very complicated.
But here's the thing. You pull this lever helps a little. You pull that lever, this lever helps a little. You pull that lever, this lever helps a little.
Start dinking with those pipes. That's what you gotta do.
These are the things that need to be done.
Yes, I would agree with that.
The other aspect out of this, in my opinion, is we need to start building more housing. We need more housing.
Yes. All kinds of housing.
The other aspect, I'm kind of, don't get me wrong, they're out there, there's good programs, and we should always have them, but I don't think the government should come out and go, here's a huge push for down payment assistance. Now, I want down payment assistance programs, but the problem is I think that defies the supply and demand concept. We had a lot of stuff coming out of the state of Illinois during the Great Recession, post-Great Recession, with down payment assistance programs and things like that. The problem is you're pumping more money into the system. And in my opinion, when you look at that historically, you're not increasing supply, you're increasing demand, which is going to increase the price. And at that time, we needed the price increased.
However,
yes,
it's not a matter of, it's complicated because you've got to look at affordability and for whom. And
but
what
you
have to define your goals and who you're looking to get in, who you're trying to help. Are you trying to help the first-time buyer that's just trying to get their first foot in the door, because right now affordability for millennials and younger it's very, very difficult for them to buy homes.
But if you get these interest rates down and you increase supply, okay, you're going to address the affordability rate.
To a certain extent, again, I think you're right.
Yes.
To a certain extent, I would agree with that.
But if you pump money into the market in down and I'm not talking about the down payment programs we have in place. Those are normal. That is already baked into the cake. If you come in with some kind of overarching down payment assistance program that was like 2010, all right, that where they were giving $7,500 in down payment assistance funds. It was a 5-year repayment plan, and then it was off. You didn't have to actually make any payments. When you come in with this, and I mean everybody was using the program. Everybody was. You're pumping the money into the thing, which pumps up demand, which now will increase price.
Okay, so again, if you're strategic about it, if you use a certain amount of limited funds for it, and you really work that switch, it can be very beneficial
for a select few that get the program, but not it's not. I don't think it solves the overall problem.
I don't think it's meant to.
Yes, it's not meant to.
That's the whole point.
I
think there's a lot of levers. Again, it's like you saying, a little bit of this and a little bit of that, and you bring things in. I don't think there's one all fix all that's going to push the button and everything's going to be better. We need more housing. We need some strategic grant programs. We need some, like I said, a little bit of this, a little bit of that, and that will help people gain access.
Speaking of gaining, the building activity, as I said, that's another aspect, and it has gained ground. Housing starts, for a forward-looking indicator of housing supply and construction activity, climbed 6.2% to an annual pace of 1.4 million homes in December, according to government figures released last week, which has been delayed due to the federal shutdown. Both single-family and multi-construction contributed to the advance. Regional housing starts in the West drove the biggest gain in the nearly in a year, while in the South, construction fell 2.8%. Neither one speech nor a single federal policy is going to solve the housing affordability challenge we face, National Multifamily Housing Council President Sharon Wilson Gino wrote ahead of the State of the Union. Instead, elevating the housing shortage requires sustained commitment to building housing of all types, backed by public and private investment through public-private partnerships, and freed from outdated rules that slow construction and drive up costs. I'm all about getting rid of some of these outdated rules.
Absolutely.
Lot sizes have to be this big. It has to be a single family house. It has to have brick on the front. It has to have a certain type of roof.
Yeah.
Okay.
It has to have a sprinkler system.
Has to have a sprinkler system. Has to have. I mean, there's a lot of different scenarios. Don't get me wrong. There is a quality that the market is going to accept and not accept. And if you want to build a piece of junk house, it's not going to be accepted.
Right.
Especially by the real estate community. We're going to call a spade a spade. You're going to build junk?
Yeah.
We're going to turn around and tell our clients, no, that is a junk house. There's a difference between a cheap house and an inexpensive house. You want an inexpensive house. You do not want a cheap house.
Correct.
I mean, Do you need to have granite countertops? No. Formica, that's a inexpensive alternative.
They've come a long way, too. Not your grandma's Formica, just saying.
It's not the little snowflakes on
The pink
snow.
stuff.
You knew exactly what I was talking about. I didn't even have to tell you. That's hysterical.
Went with my pink stove, my pink electric push-button stove on my first house.
So there's a lot going on.
That was a cool stove. Just saying.
You know, I want to keep going through this article. There's more to it, but we're going long. So we're going to take a quick break. When we get back after the break, we're going to finish talking about this Homes.com article, because there's so much here in this concept. And I didn't even think we were going to go this long. All right, keep it here with Get Real with Eddie.
Are you a real estate agent ready to take your career to the next level? Tired of feeling like just another number in the office? It's time to join a brokerage that's invested in you. Exit Real Estate Specialist. At Exit, we don't just offer a desk, we offer growth, mentorship, and the tools you need to build lasting success. Led by Eddie Ruettiger, designated managing broker, we focus on helping agents create generational wealth, not just close deals. Imagine having the support of cutting-edge technology, top-tier training, and a culture where your success is celebrated. Plus, with Exit's unique residual income opportunities, you're not just earning commissions, you're building your future. Ready to grow? Ready to thrive? Join Exit Real Estate Specialist today. Call Eddie Ruettiger directly at 815-823-5478 or visit www.exitrealestatespecialist.com to learn more. Your future in real estate starts here.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
It's Eddie Ruettiger from Exit Real Estate Specialists and Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Thinking about selling your home? Don't just list it, leverage it with Eddie Ruettiger, designated managing broker of Exit Real Estate Specialists. Eddie puts powerful marketing strategy behind every sale, featuring professional photography, detailed floor plans, immersive 3D virtual tours, and dynamic video walkthroughs that make your home stand out. With targeting online campaigns, social media exposure, and proven strategies, Eddie attracts serious buyers to get your home sold fast and for top dollar. Plus, you'll always be in the loop with clear, constant communication. Ready to sell with confidence? Call Eddie Ruettiger at 815-823-5478. That's 815-823-5478. Or visit yourdwellings.com. Eddie Ruettiger, Strategic Marketing. Stand out results. 815-823-5478. Or visit yourdwellings.com today.
Doing everything for you. accept the moving, and be glad. It's Get Real with Eddie.
All right, so getting back into this, they were talking about the housing starts and stuff like that. The other aspect that is in the backdrop is the ban of Wall Street from buying housing.
That's such an interesting, because we've talked about it multiple times.
It is. I mean, so the Trump administration forward details on a plan to restrict institutional investors from purchasing single families. Companies that own as few as 100 houses. Large rental operators argue that they are part of the housing solution, not the problem. For example, executive at America's Homes for Rent emphasizes that their business model focuses on build to rent, meaning that they build single family homes specifically for renters rather than competing with home buyers for existing inventory. I not had seen America Homes for Rent build anything in our market.
There is
They purchased a lot of homes in our marketplace.
But there is a subdivision that was built recently in the Oswego, Aurora area that they did that. They built it, and I don't know, the company may or may not be. However, that was they built them to rent them.
Well, and that could be a good model. Now, the question comes into play is, are they interfering with the local consumer when they do this? Because it's like, well, I'm not competing against a buyer or a seller because I'm building it new. Okay, but now all the other construction companies builders have to compete against you to get the manpower. So there could be an argument there.
Yes and no. There could be an argument there. However, we need all kinds of housing.
We need rental property.
We need rental property.
I'm not.
And if it fights the NIMBY because they're brand new homes and they're in their own little subdivision, so there's not as much NIMBY going on, it may be.
Okay. For the new listener, what is NIMBY?
Not in my backyard.
There you go. Because there are communities and there are areas that go, no, I can't have a renter next to me. Why? I mean, that's my question is why?
Yeah. Why?
And they go through a list. Well, they don't take care of their property as well. They don't do this. They don't do that. They don't do this. Some do. Some don't. It's no different than an owner-occupied.
I was going to say I've seen homeowners who own the property and let their properties go to absolute trash.
Yep.
So it's not a renter. It's not necessarily a renter.
Data from John Burns Research and Consulting found that if the 100-home threshold stands, only 6.3% of single-family investors would be affected by the White House proposal, while 93.7% would remain untouched. Some housing economists argue that the focus on Wall Street is misplaced. Institutional investors account for a small share of the single-family housing market. That's a red herring, Case said. Institutional owners simply don't own enough single-family housing stock for this purpose to move the needle. And I have to be honest, he's right. We've gone over numbers time in and time out. They don't own enough housing. Now, I get it. In certain areas, in certain communities, maybe they're taking up a huge percentage of the housing stock, but nationally speaking, they're not.
Right.
Not only that, but they simply don't earn enough from renting out these houses to make it worthwhile to compete against individual buyers who want to own the house and have that financial health to afford it. And that's another true statement. They're not the ones driving up the price. All right, they're not.
No.
They're not. Maybe in the situation like I've had where the last two listings I had were flips. They are properties that needed to be gutted. They were dated. They needed work. Yes, okay, I'm listing it at price A, and we're taking contracts over list price. And these owner occupants are coming in at list price, not writing over, and they're not getting it because, well, the flippers are going to buy it clean it up, and then put it back on the market and sell it. But that's not an institution. That's local, small individuals.
Yeah.
And getting these houses back up on the housing roll. So it's just an interesting situation. I did find it rather shocking, though, that President Trump was the one that looked to ban the Wall Street from the housing market. I mean, I totally wouldn't. If you would have said that was coming out of him, I would have said, no, he ain't going to do that. So I did find that rather shocking.
I don't know. I think it's
it's definitely a move that I think, well, it's not having a huge impact. There's a PR impact.
I was going to say, it's throwing a bone. It's throwing a bone.
I agree.
It's not
No.
really going to make impact one way or the other, but it sounds good.
It might help certain area and certain communities where we've heard that, these companies are coming in and they're buying up a huge amount of inventory in very specific markets, in very specific areas.
Again, it's targets and tweaks of a little bit of this and a little bit of that. So while I don't think it's going to make a huge impact, could it make some? Sure.
Yeah.
Sure. Take it.
So
take it as a W.
Here's my question. And this is from an article from Real Estate News. Dave Gallagher wrote this on the 26th. Have mortgage rates finally reached the magical number? The average weekly rate...
Not my magic number.
Not your magic number?
Not my magic number.
The average weekly rate dipped below 6% for the first time in more than 3 years, a threshold that could unlock buyers and sellers this spring. So while the drop below 6% was small, it could shift consumers' mindset, noted Kara Neeg, NG. Would it be Neeg?
Is it new? I think it's pronounced new.
New? There's no vowel there.
Right. I want to say it's...
New? Senior economist at Zillow. I need to start, YouTubing these people to see if I can find how their names are pronounced.
I'm curious. Keep going.
Okay. You come back to me on that. Kara stated, for many shoppers who pause their search, that psychological threshold may be enough to bring them back into the market. So are rates low enough? According to Lisa Sturdivant, chief economist at Bright MLS, while overall economic numbers appear solid, economic uncertainty is still weighing on the minds of many prospective buyers and sellers. In addition to the rates moving lower, people also are waiting for signs of stability, both in terms of rates and economic and political environment. Wild cards like new tariffs, private sector layoffs, changes in Fed Reserve leadership, and potential international conflict could cast a shadow over the sunny, low-rate environment. I did not look at what rates have been this week at all. So, with everything going on
just
overseas,
below 6.
So, which means there's a flood to the mortgage market for, in my opinion, for safety. So, which is great. If they're starting to see mortgages mortgages used to be the safe bet.
Yeah.
And that's where people win. So now, if we could see that, that would be awesome. So,
it's not new. It's Ing.
Ing?
Ing.
Kara Ing? Yeah. That makes sense. That makes sense. If,
or Eng. It could be pronounced as ing, like ring or sing, or can also be pronounced as Eng.
I'm going
E-N-G.
Ing.
It is Cantonese or it's Vietnamese. So I wonder if it depends on where they're from.
It could.
But NG, like sing, singer.
Pending sales were down 5.5 annually for week 4, ending February 22nd. However, applications increased 0.4%, ending February 20th, according to the NBA. So we're going to see what direction this all goes in and what happens in this. With that being said, let's hit the break. When we get back from the break, the real reason home sales slowed in January, and it's not what you think. Keep it here with Get Real with Eddie.
Are you a real estate agent ready to take your career to the next level? Tired of feeling like just another number in the office? It's time to join a brokerage that's invested in you. Exit Real Estate Specialist. At Exit, we don't just offer a desk, we offer growth, mentorship, and the tools you need to build lasting success. Led by Eddie Ruettiger, designated managing broker, we focus on helping agents create generational wealth, not just close deals. Imagine having the support of cutting-edge technology, top-tier training, and a culture where your success is celebrated. Plus, with Exit's unique residual income opportunities, you're not just earning commissions, you're building your future. Ready to grow? Ready to thrive? Join Exit Real Estate Specialist today. Call Eddie Ruettiger directly at 815-823-5478 or visit www.exitrealestatespecialist.com to learn more. Your future in real estate starts here.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
It's Eddie Ruettiger from Exit Real Estate Specialists. And Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Thinking about selling your home? Don't just list it, leverage it with Eddie Ruettiger, designated managing broker of Exit Real Estate Specialists. Eddie puts powerful marketing strategy behind every sale, featuring professional photography, detailed floor plans, immersive 3D virtual tours, and dynamic video walkthroughs that make your home stand out. With targeting online campaigns, social media exposure, and proven strategies, Eddie attracts serious buyers to get your home sold fast and for top dollar. Plus, you'll always be in the loop with clear, constant communication. Ready to sell with confidence? Call Eddie Ruettiger at 815-823-5478. That's 815-823-5478. Or visit yourdwellings.com. Eddie Ruettiger, Strategic Marketing. Stand out results. 815-823-5478. Or visit yourdwellings.com today.
It's Get Real with Eddie, where everyone deserves the opportunity of home.
Why do you think the housing market slowed in January?
I think the go-to answer, not necessarily the answer, but the go-to answer would be weather.
Well, let's see what they say. This was on GetRealWithEddie.com. So if you saw headlines that talked about how home sales fell sharply in January, it's probably raised an eyebrow. Yes, in January, home sales declined, but that has more to do with seasonality and the weather than it does with any big drop-off in demand. What's really behind the decline? Report coming out of the National Association of Realtors says the pace of home sales fell roughly 8.4% last month compared to the month before. And that's true. But it's not a reason to panic. Data shows that it's normal for sales to dip in January. In the last 4 years, that pattern has held true all but once. And sure, the decline we saw this year was a steeper drop-off than normal, but that can be explained too. More on that moment. Sorry. My throat just got really dry all of a sudden. The real important part you're not going to get from the headlines is, typically speaking, that the pace of home sales picked up in February as the spring market starts to take off. When was those big storms going through the South? Was that in January or was that February?
It's all a blur.
I know.
We had some crazy weather everywhere.
I think we dodged a lot of crazy weather this year, honestly.
Yeah, other than the cold. It was just really cold.
It was brutally cold. But
it was cold, but we were dry. We were dry but cold.
Yeah.
Well, actually,
we got the wetness in November, which was odd.
November, December, we got quite a bit, and then it started drying up as January went further along, but it got cold.
We got a couple little light dustings, but nothing major.
Yeah.
Nothing really major. So, all right. So, why the
February was dry. Anyway.
Why the big drop this year, especially with mortgage rates? Realtor.com explains Winter Storm Fern, which dumped. I love how they name these storms now.
Yeah.
This is hysterical. It's like, oh, Winter Storm Fern, which dumped snow and ice across large swaths of the country, likely disrupted some closings, weighing on the data and making it difficult to pick out the housing market momentum from the weather noise. So I don't think it stopped closings. I think it stopped people going out and looking, and that's going to have an impact 30 days later.
Well, and if there was any damage done to the storm, people would delay
closings. Yeah, that's true. If there was damage done, that would delay.
And with a lot of ice and all that stuff, it could have been damage.
Yeah. January missed sales are more likely postponed than lost. They haven't disappeared, and they're likely a little longer. I'm going to be honest. When we get these cold snaps, I stop working. Not that I stop working. It's just my phone stops ringing. Yeah. No one wants to be outside in that stuff.
No.
So it has nothing. I mean, don't get me wrong. They don't want to be out when it's snowing. If it snowed and then we're like 30, 20s, they'll go look at houses.
Yeah.
But if it's snowing or it's brutally cold, no one wants to go outside.
Yeah. I primarily work with seniors, so you know how they feel about it.
They're in Florida.
Yeah. Or they're just in the house because
they're my wife. My wife is she's now getting ready to come out of hibernation.
Yeah, it's just about time. I agree.
I'm not kidding. You'll see it in the next 2 or 3 weeks. She's gonna look. We should go out for dinner. We should go out for dinner. We should go out for dinner. We haven't been out for dinner we've been out to dinner, but not
like you are in the summer.
Not in the active way where she's pushing me out the door. You know what I'm saying?
Yeah.
You know, she was reminding me the other day that, hey, I've got dinner with friends this night. I'm like, what do you know? I've got dinner with the kid that night. As in, yes, I know. I mean, so it's like they do. My wife is one of them. She even knows it. She goes, it's time for hibernation. Mm-hmm. So
I'm with her. I hide.
She's with the sun. If the sun is up, she is out. If the sun is down, she is in. I mean, it's the easiest way to look at that.
I was going to say temperature. I'm all about temperature.
Oh yeah, no, my wife is all about the sunlight.
If there's no sun, and it gets dark early, I'm done. I'm done. I'm going home. I'm cooking. I'm whatevering. I don't really like showing houses when it's dark, and not because I don't think it's less safe. It's more that you really can't get a good look at the house or the property or the roof or really get a good feel for the house.
Siding, tuck pointing, and roof.
Yep, if it's dark.
Siding, tuck pointing, roof, grade on the house. Can't see the grade.
Especially if there's snow on the ground.
Or the ground itself.
Yeah.
You know, I mean, I've got a listing where it's not black dirt, it's sand. So that's going to, you know, impact what are you trying to do? What are you trying to grow? Things like that.
Oh, yeah. So in that case, I will take people out when it's dark or it's dusk or whatever, because, hey, people, their schedules, but we really try to see houses when it's light outside.
I do too. I do too. And it's kind of nice. I thought about this many times. I've just never said it out loud. It is rather nice from a scheduling point of view, because when I slow down because no one wants to see houses at dark, I can go be dad at school because there's still stuff going on at the school. Mm-hmm. And when I get busy and it's light out, he's in summer break and there's nothing going on at school. I don't have to worry about missing something. You know what I'm saying?
Yeah.
So, and now he's at a point where, you know, Dad, can I stay up to midnight? Dad, can I stay up to 1? Well, Monday. All right, you ready for this?
Yeah.
All right, because he had no school Monday. He had school on Tuesday.
Yeah.
Okay. He turns around as he's going to bed. Dad, can you wake me up at 5 a.m. so I can go look at the lunar eclipse? No, I'm not waking you up at 5 a.m. No, I'm not going to be up at 5 a.m. for a lunar eclipse.
Well, and I think it was cloudy anyway.
It was cloudy. And he did wake up at 5 a.m. I'm not kidding you. At
well, good for him.
5:15, he went up to go to use the potty.
Oh.
That's what it was. But he was up, and he looked outside, and he's like, I couldn't see anything. I said, yeah, I know. We had cloud cover.
Yeah.
Because Dad was awake. I was wide awake. I just pretended I was asleep.
Did he talk to you about the, there was Venus, Saturn.
Planet alignment?
The planet alignment?
He's looked at those. We were looking at those a week ago because there was a bunch of, we saw Jupiter because we brought out the telescope when it was a little bit warmer. We had that streak of warm weather. We had the telescope out and we were looking at, we could see Jupiter and the moons. I need to talk to somebody though, because I cannot get that good, crisp Jupiter in the telescope. I don't know if I had the wrong lenses, the wrong what. I don't know what I'm doing.
See, and I ain't the right person. But doing it in the cold weather is better. I do know that. You get a crisper look at things in the cold than you do in the heat.
Yes, you do. You do. But, I mean, it's like when I zoom in, everything just looks like a giant white, fuzzy blob.
Oh. Yeah, I don't know what kind of equipment you have, so.
It's a nice telescope. I mean, it's a good size one, I think. I don't know.
I like looking at them, and I'm interested in that stuff, but I don't know.
Yeah, I don't know either, so. All right, just wanted to touch this. We got like a minute left. And that is, if you are going to a closing, just to let you know, there is a whole bunch of new rules for the title companies and the closing agents for anti-money laundering that went into effect on March 1st. So yes, they are going to be asking you for some certain information, you know, so address, things like that. All these things are going to come playing into these new rules of reporting that they have to do to the federal government to stop money laundering. So just to throw that out there, that's going to be going on. Did you see these new rules and stuff?
I did hear about them taking effect. I have not gone through them all.
I don't know. And I didn't go through them all to see what they were. It's just basically, and this article really doesn't get into the rules. It's just getting into the fact that there are new rules and that title has to do these things. And I've talked to some of my title contacts, and they're like, yeah, it's just some small couple extra steps that they have to do to verify and do some things. But they are getting a little bit pushback, and if it's not done, it's causing delays on closings.
Yeah.
So, I mean, just get the data, get the information to them. They have to do it by law. I don't know what to tell you. These are the rules.
These are the rules.
These are the regs. Yes.
Yep.
So, all right, that wraps it up to Get Real with Eddie. Don't forget, check us out online 24 hours a day, 7 days a week. talking about your largest investment, your home, at GetRealWithEddie.com.
Thanks for listening to Get Real with Eddie. The views and opinions expressed are those of the host and guests and do not constitute legal, financial, or real estate advice. Listeners should consult appropriate professionals regarding their individual circumstances. Eddie Ruettiger and affiliated parties are not liable for actions taken based on this content. Eddie Ruettiger is the designated managing broker of Exit Real Estate Specialist, Illinois license number 481-014247, located at 2405 Essington Road, Uden I, Joliet, Illinois 60435. Exit Real Estate Specialists is an equal housing opportunity provider. Each Exit office is independently owned and operated. To join an Exit office, call Eddie at 815-823-5478.